G'day, this is Rob from Integration Kings, and I just wanted to cover using supplier credits in DIA and how to use it correctly with Xero. Okay, so the first things first, supplier credits are a way of actually using up either a credit against a credit note or the fact that you've prepaid. So we're going to go through both scenarios. So the first scenario is, let's just pretend I'm going to raise a supplier invoice. So I'll go in and basically put in a purchase order. So I'm going to raise purchase order out to a client, out to a supplier, and let's pretend we're going to buy in this unit here. And we're going to get 10 of those, and they're going to cost $1,000 each, and authorize that in. So first step, put your purchase order into the system. The next step is down below the purchase order. Once you've imported and authorized it, you can then record a supplier deposit. So you use this function if you do any part payment before you get a supplier invoice, and you should only do it in DIA. Don't go doing it in Xero. So you basically go into DIA, you find the purchase order, and if I'd part paid, say 30% of this, I would basically record a prepayment. Now the reason it's classified as a prepayment is you haven't received the goods and you haven't received the supplier invoice at this point in time. So technically you're paying it in advance. And if it all goes pear-shaped, it's treated as a prepayment. At the end of the process, DIA's intelligent enough to take the prepayment and then apply it to the real supplier invoice down the track when you actually complete the workflow. So we'll put in and we'll just say, look, we're going to put it to the main bank account, a reference, doing it today, and we're going to prepay, oops, clicked too fast. We're going to prepay, let's say we're going to prepay $5,000 against this, so $5,000 against it. It'll record the prepayment, and that'll get stored on file as a supplier credit. Now you can look up the supplier credits at any time and look at the register of them underneath supplier deposits, and it'll show you a big register of them all. So if I was to right click on this and just open that up, you'll now see that we have a supplier credit on file for $5,000 because we paid it front. All right, so then I move through the workflow and I put in the invoice and copy across and authorize in. And what the system is, it'll recognize at this point in time that you have a supplier deposit on file, and it'll say, do you want to use this up and consume the part value of the tax invoice? And you'll say, yes, I do want to do that. And you'll pick the supplier deposit you're going to utilize from your list, and you'll apply it to the transaction, leaving the balance. So then all the mechanics works out correctly. It will then fire that over to Xero and maintain the register around credit notes. So you don't have to do anything, you just do it all in DIA. The only thing you'll have to do is mark off the original payment in the bank feed against the prepayment, and it'll just match up. The next step might be, let's receive the stock in, and let's pretend we're going to do a credit note. So either you do a credit note, you go into suppliers and you do a service, credit note. This credit note here would be used if it's not, again, it's an inventory item. If you're doing a credit note and you know the original purchase order workflow that was related to, you should go find it under all purchases, come in, go to credit notes, and then raise a credit note against that original purchase workflow. The reason we're doing that is to ensure that it's recorded in the same workflow. So let's copy over, and I'm going to return 2 units. And I've returned them and unstocked them as well. Now, straight away, the question we always get asked is, why is it not applying straight away to the tax invoice? Like, why is the tax invoice now not having two items taken off it? Now, the reason that it's not happening straight away is you've got to then take this credit note and make it into a supplier deposit, and then you can use that against outstanding tax invoices. So once you raise any credit note in the system, you have the ability to either do a physical refund, which will mean you physically refund it out of the bank and cash it out, or they reimburse you for it, basically. So I'm thinking about customer there. So if it's a customer format of this, you're obviously going to pay the customer back. If you're a supplier, sort of in the supplier's concept, they'd give you the money back. So there'll be a refund coming back in for $2,200. But if you're going to use that as a credit against other tax invoices, you would first have to add it to the credit system on the particular date, and it will then go into the register. It'll then appear in the register again, and then you can actually go back to a tax invoice and use up your deposit that you now put on file and eat up the remaining balance. So just in summary, basically when you put a credit note in, down the bottom of it, you can do a supplier deposit. That'll add it to the supplier deposit register. You can then use that supplier deposit register against an outstanding supplier tax invoice. DIA will then take care of all the legwork inside Xero. So the only work related to any of these transactions you need to do manually in Xero is either paying the balance for a batch payment under accounts payable, or going to the bank rec and simply marking off and reconciling your books. The rest of the functionality gets all driven in DIA. If any of you ever have any questions on this process, just let us know, come back to me, and we can go through it more in detail. But hopefully this video covers off everything you'd ever want to know about supplier deposits and credit notes around suppliers and managing in DIA. Thanks.